and which was, I agree with everything he said. Like I say, you start with the economic calendar, and we know that at 9:30 there are these huge reports coming out from Great Britain, the Bank of England minutes, and the unemployment figures. Those are huge reports. Obviously, they'll have more of an impact on the pound dollar, especially the pound dollar. So at 9:30, we might see a huge move in the pound dollar. Like Remy rightly said, we're not sure if it's going to go up or down. So that's one thing we don't know. And we just have to be ready to go with the market whichever way it goes. But again, at 1:30, we've got this huge report coming out, the U.S. Consumer Price Index, which is shows the inflation figures in America. And again, as we know, most major currencies are pegged to the dollar, so that will have a huge impact on most financial markets and even, in fact, commodities. So the commodity market, the indices, the stock market, the Forex market, virtually all markets will be affected by that at 1:30. And there are no further reports of importance after 1:30. So like Remy rightly said, with that in mind, I think usually if you're a very cautious trader, you actually wait till the last report of importance before you trade. If you're very cautious, you wait for the last report of importance. And 1:30 is the last report of today of importance. So like we do, if we're going to trade like I do, where you place a cautious trade beforehand, if despite one coming out at 9:30, if you lose out on your first trade, even if you lose out before 9:30, it's best to wait till 1:30 before you place your next trade. So we're going to have a look at the pound dollar, because that's one that's most likely going to be affected by the first report at 9:30, but we'll also look at the Euro-US dollar. But yes, if we lose out on the order we're going to place now, even if we lose out before 9:30, it will probably be best to wait till 1:30 before you place your second trade, if you lose out on the first one. And like I said, I've sent out a webinar invitation for 1:20. Ignore the one that says 9:20 with the headline, subject headline 9:20. We're not meeting at 9:20. Because like I say, if we lose out on this trade we're going to place now, we're not going to place any more trades till 1:30. So we'll just go to pound dollar. So like rightly said, we'll start with a 1-year daily chart, have an overall view of the market. Again, we can see, like I said, it was initially trending up. Now it's beginning to fall. It's broken the moving average 50. So that you could have sold it yesterday from a swing trading point of view. And you can see from the MACD, there's still selling pressure in the market. Again, these are indicators. They're not guarantors. They're not going to guarantee what's going to happen in the market, but that's an indication that there's still selling pressure in the market. But again, the report could come out at 9:30 and change the whole dynamics of the market. So we'll go down to the 2-day 5-minute chart. And like Remy rightly said, the market, you can see, is trending sideways. Again, for various reasons. One, there was a huge fall in the market yesterday. So that huge fall also can lead to consolidation in the market, leading to a sideways trend the following day. And then with the impending reports of high importance at 9:30 and 1:30, that's another reason for the market to go sideways. So what we want to do is we want to definitely keep out of the sideways trend. And that's the low point of the trend there at 15,839. And the high point is there at 15,900. Okay, so you definitely want to keep out from trading within that sideways trend. But of course, like Remy rightly said, that low has not been tested, and that high has not been tested. I'll actually take it up to 59.01. So that high has not been tested, that low has not been tested, so that's not a resistance in the market, and that's not a support. It's just a high and low of the sideways trend. So you definitely want to keep out of this place. And obviously, because of the reports coming out at 9:30 and 1:30, it will best to take the safest options to place your pending orders now. And the safest place to go will be just above the pivot point at 15,940, or to sell just below the first support at 15,786. So we know that if the market continues going sideways, then it probably won't take our orders before these reports come out. So we'll be safe there if it keeps going sideways. Of course, if it decides to start trending before 9:30 and it breaks this sideways trend and goes as far as the pivot point, then we're happy to buy just above the pivot point. Or if it breaks the low point there and keeps falling before 9:30 and breaks the first support, then we're happy to sell just below the first support. But up until 1:30, if the market does not get to those points by 9:30, you just leave them there till 1:30. Obviously, by 1:30, if the market is still trending sideways within this narrow range, which I doubt, I suspect the report at 9:30 will have an impact on the pound dollar, and I doubt it will still be trending within this range. But you never know. But obviously, if it still keeps trending sideways by 1:30, then we can probably then think about using these points in the sideways trend as a possible point of entry in the market. But definitely between now and 1:30, we want to be as cautious as possible, and we're going to go for the more conservative approach and use the pivot points. So we'll buy just above the pivot point and sell just below the first support. Okay.